Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So, a couple of topics I wanted to touch on today. The first one was what happened in the month of October, and the second thing is what happened in the election last night in the United States. So, first, for the month of October, markets were across the globe quite weak. We saw the U.S. drop significantly. We also saw other areas of the world drop and other assets drop. That includes bonds and real estate, etc. Client portfolios, on the other hand, tended to slightly rise last month. That's due more to positioning and how we have things positioned, as well as we had a couple of significant outperformance from some of the managers that we use. So very happy that we were able to post a positive return for most people, even though the overall market was quite weak in October. So going forward, we would expect there to be continued volatility as we hit the end of the year, although that volatility historically this time of year tends to be on the upside rather than the downside. But for right now, we're continuing to have our asset mix the same as what it has been, which, as I've said over and over again, continues to be preparing for any volatility while at the same time ensuring that we're able to participate in upside of the market. So on to the big news, which is last night's election in the United States. Really, at the onset, most people had expected it to be a toss-up. It was anything but. Most people expected, potentially the results not to be known until at least this weekend, and then after that, multiple court challenges, depending on who was favored to take the White House. As it turns out, Trump was, I think it was officially at 3 a.m. Eastern time, was declared the winner by a lot of outlets last night. So not that Trump winning was a surprise because it was a toss-up, but what was the surprise was how fast and how decisive he appears to have won. As far as the important part goes, which is not only a Trump presidency, but what happened with the Senate and the House of Representatives. As of right now, the Senate has flipped to Republican. The House of Representatives is leaning towards flipping to or staying Republican, I mean. Um, I'm not going to opine on, what that means in any great depth. Although I would say that if there's a concentration in all three parts of the government in the United States in one party, that tends to lead to the first 6 months being lots of stuff being done, and after that point, it's going to be hard to tell because the House is going to be, like I said, very close at this point. Now, what does Trump's presidency mean? I mean, one benefit is we have had him before. There's been a lot of talk over the last 4+ years about what he will or will not do. I think from an investment point of view, we have seen the markets increase significantly today. Again, that's a reaction. Who knows whether that'll be continuing. Really, the reaction today was a big increase in Tesla. Elon Musk, who backed Trump significantly, is the feeling is he will benefit from a Trump presidency. And the other big area that has really increased today has been the banks. So I think, as it applies, like I said, to the equity markets, you really have three things in play. First, which I don't think is a horrible negative, nor is it a great positive, depending on what side of the fence you're on, is I think that there will be a significant lack of regulation enforcement or regulation itself going forward. One of the things with the last 4 years has been a significant amount of regulatory oversight as it applies to everything from Bitcoin to mergers to other areas. So I would say that we're gonna probably have less of that under a Trump presidency, and that should happen very, very fast. The other thing that is, that he said over and over again is his love of tariffs and his desire to make tax cuts. Now, the funny thing is with the tariffs is tariffs are a de facto tax on the American people. If you have a car that's worth $100 in China and there's a 100% tariff on it, that means that, that car would be sold for, keeping things simple, around $200 in America. What that means is that $100, although that goes to the government in the form of a tariff, the consumer still pays that other $100. So it's a de facto, like I said, tax on the consumer. The flip side to that is Trump has been very vocal in great range of tax cuts he'd like to make. It'll be interesting to see how much of that comes through or not. But there's an argument to be made that even though we have a higher amount of tariffs over here, we can have a reduction in tax over here, and that might be just kind of stabilizing everything. That being said, I'm not sure if it'll be that clean cut. As well, I would say that the risk of inflation has probably increased because, again, tariffs mean higher prices traditionally. That would mean that there's more, prices have gone up, which is by definition inflation. So, like I said, early days, we'll have to see what happens. I think him naming who he plans to name for cabinet over the next few months will be very telling, as well as who he wants to surround himself with on the advisory side. So, time will tell. Like I said, right now, things in the stock market are quite positive, things in the bond market quite negative, because and this was the case whether Harris won or Trump won, the amount of potential deficits and increase of the U.S. debt over the next 4 years is going to be incredible. Again, if we keep it really simple and say that forget about tariffs for a second, but if there was a bunch of tax cuts, those tax cuts would drive, less revenue coming into the U.S. government, which would mean that they have more of an overdraft or deficit that they would have to deal with at the end of the year. How, of course, governments deal with that is issuing more debt. So this morning, bonds were anticipating that there'd be a lot more debt hitting the system, so interest rates in the U.S. went up. Again, time will tell as to what the effects are going to be overall on this, but I would suspect that we're into some volatility as we get into the end of the year. We had expected volatility going into the U.S. election, but we didn't expect there to be such a clean-cut winner. The thing now is that with this volatility, it's what Trump says. So we're back to the same as we were from 2016 to 2020, where people will be watching his social media, people will be watching what he says, and whether that will impact what he actually does. So that's a lot for right now. Jim, myself, as well as Alex and Angela are around to chat any further if there's anything in particular that that you'd like to discuss in relation to the election or just the overall economy. We did take a good look at the managers that we use and the investments that we use, and there's no short-term changes that we want to make because, again, we balance portfolios in such a way that if there was things that happened, no matter what direction, we were able to protect or benefit. So reach out to us if you have any questions. We will be hitting our year-end time here around the middle of November. So that's when we touch base with all of you and make sure that we're okay from a tax point of view this year, or anything that has to be done at the end of the year gets done. But that's about it for now. Like I said, reach out. We're around and hope you have a great rest of your week.